Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to goldradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome to goldradio.fm. Podcasting in 0.99995. I'm Jim Goddard. My guest is Marc Faber, editor and publisher of the Gloom, Boom, and Doom report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome to the premiere episode of goldradio.fm, and happy April Fool's Day, if there is such a thing.
Thank you for having me on your program.
Marc, are people's fools if they don't have some gold?
No, because there are some people, obviously, who have no money, and so naturally they don't own anything at all. Secondly, if people have money, frequently they have to invest that money in the home in which they live. In other words, their savings go all into their living expenditures. And thirdly, statistically, if you look at very long periods of time, equities have probably outperformed gold over, say, 50, 100 years and so forth. So they may argue, well, we have to live with volatility, but if we can live with volatility, in the long run, equities will perform reasonably well or better than gold. And I would never call an investor a fool. The only fools that exist in the financial system are central bankers.
Is there an affordable way for a person to get gold into their portfolio?
Well, they can buy ETFs, and they can buy physical gold and gold coins, and then it's not included in their portfolios, but they own it physically, and that's one way I would recommend to accumulate gold.
Does it look like the stock markets have bottomed?
Well, there are different views, but my opinion is this. We had a bull market in asset prices, and especially in financial assets, which began in 1981-82. And we've been going up, and again, central banks have bailed out financial institutions and printed money, and now we have an event that essentially shuts down the global economy and also froze up the capital markets, whereby I have to say, and this is important to understand, in the summer of last year, in 2019, August, some stress developed in the repo markets in the U.S., and they gave up the quantitative tightening and introduced again quantitative easing policies, whereby the balance sheet or the assets of the central banks began to grow again. In other words, we had 2017 to 2019 in August quantitative tightening. In other words, the assets of the central banks were reduced. And after August, they were again increased. But this had nothing at all to do with the coronavirus. The coronavirus in the Western world only became a factor in February. And so we had some stress in the financial market already. And the central bank by now has assets that are at a record. In other words, the tightening move, assets were reduced by something like $700 billion. But now the expansion of assets has been between the end of August and today by $1.5 trillion. And in my view, the balance sheet of the Fed, which is now $5 trillion, I think by year end will be at $10 trillion.
All this money that they're throwing at the stock market right now, is that essentially wasted money if the markets are going down?
Well, every investment is basically wasted money if the investment doesn't go up. You understand? Unless it's your house, because then you live in your house, and so it's not necessarily wasted. Even if there is no appreciation, you may enjoy your house. But as an investment, pure investment, everything that doesn't generate return is basically wasted. And so if you buy bonds that have a negative yield in Europe, it's basically wasted. And if you buy stocks and they go down, it's wasted. But what I wanted to say earlier is we have had all these excesses in financial markets in the last 10, 20, 30 years. And I don't believe that all these excesses will be corrected in just 1 month's decline. You understand? We went down. This was the sharpest decline in the U.S. market ever. It was not the longest, but in 30 days, we went down 30% at the fastest pace ever. Now, I think the market became very oversold a week ago, and it has been rebounding, but I don't think it will rebound all that much more. I think it will work lower in time, and the ultimate low will probably be in about 2 years' time.
So far in 2020, the volatility of gold has picked up. Is this a good sign for higher gold prices ahead?
The higher volatility does not indicate whether the market will go up or down. Usually in terms of stocks, when volatility increases, stocks go down. And in a bull market, volatility tends to go down. So if there is higher volatility in gold at the present time, if anything, it would suggest that gold prices will rather edge lower. Now, you may argue, well, with all the money printing in the world, why would gold prices go down? I 100% agree with the reasoning that with all this money printing, gold prices should be higher. But you have to see one thing. Today, in the world, we have sovereign funds, we have hedge funds, we have pure management companies, and we have wealthy individuals. The wealthy individuals, they own stocks, bonds, real estate, and gold, and maybe some other commodities. But the point is, if stocks go down significantly, and if they have investments in loans, or in bonds that are not high quality, these bonds also go down. So in order to meet margin calls, they may have to sell something that hasn't gone down, or they rebalance the portfolio. Gold is one of the few assets with Treasury bonds in the U.S. that is up this year. It's up about 5%. It's up 50% since the end of 2015, early 2016, whereas the Russell 2000 and other indices are at the level they were in 2015. So some people will look at their portfolios and say, oh, everything is down, gold is still up. Maybe it's better for me to take some profits in gold because maybe it will also get hit, or I have a margin call in the account because of some bad positions, so I'll sell some gold to meet the margin call. That is a problem for gold at the present time.
Is the price of gold a good bellwether for the severity of the coronavirus outbreak?
I don't think that the gold price has all that much to do with the coronavirus. I rather think that it has to do with the collapse in liquidity, and as I just said, with the money printing now by central banks, which should essentially argue for a higher gold price. But as I explained, there are huge margin calls in the system. There's a liquidity problem. That's why the Fed is printing money. But it may not reach all institutions, and so there's selling pressure in gold.
The coronavirus is being called a black swan. How has gold reacted in previous black swans, and what could we likely see gold do now? Usually
when things go bad, the gold price tends to go up. But this is a liquidity crisis. I want to remind you once again what I just explained. We have tightness in liquidity. We have many companies, they need loans to survive. Otherwise, they won't survive. The government is bailing out some of these companies, but not all of them. And they're not bailing out your portfolio. So if you have a margin call in your portfolio, you may sell some gold, which is not good for the price.
We'll have more with Marc Faber right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to goldradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome back. We're speaking with Dr. Marc Faber. Marc, we're hearing there's a shortage of physical gold. If there really is a shortage of physical gold, should it be showing up in the price of gold?
Yes, there is a shortage of physical gold because a lot of gold refiners are closed at the present time because of the coronavirus. But there isn't really a shortage. If you want to go and buy a kilo of gold, you can find it. It's just a question at what price. I can go to my bank and tell them buy a kilo of gold. And if they don't find it at the current price, if I pay $3 more, they're going to find it. And if they don't find it at $3 more, I can pay $6 more. You understand? It's not that there is no gold. There is plenty of gold in the world. It's not like there can be occasionally a shortage of food, because all the food that is being produced is basically eaten. But all the gold that has been produced hasn't been eaten, it's still there. It's in vaults, and it's in investment portfolios, and on your wife's earrings, possibly, and so forth. At some price, they are sellers. And so there's never a real shortage of gold. But right now, if you want coins that are minted, say, by the mint in Australia or in Canada or in Switzerland, maybe you won't find new coins. You have to buy old ones.
President Trump is planning to spend trillions of dollars in the U.S. economy. Should this spending have an effect on the gold market?
Not the spending, but the money printing by the Fed. As I explained, and I want to do it once again, because your questions relate essentially to the same subject. There is money printing. This money printing will not go away. When they introduced in 2008 QE1, I said this is QE infinity. They can't go back. They must continue printing money. And that will continue, and it will be relatively favorable for gold, and in the long run possibly very favorable. But I just explained also that at the present time we have a credit crisis and we have a liquidity crisis. And in such a crisis, the price of gold can also go down. And by the way, most markets in the world are down this year between 20 and 30%. Okay? There are some markets that are down 40%, but say 25 to 30% is the norm. And gold is up 5%. Why do people complain about this performance? I just don't understand. Gold has performed relatively well, and people should be very happy that it's not down 30%. I'm a large gold holder, but I'm just saying that gold has performed well. There's nothing to complain about it.
We're hearing that the Treasury Board might absorb the Federal Reserve. If true, could that be the beginning of the end for central banks?
The government in the U.S. Treasury and the Federal Reserve is one and the same. There's no difference. They talk to each other. They coordinate their policies with each other. If there is a fiscal expansion, the Fed has to finance it because the tax revenues are down. And in a crisis like we have, for sure they will not increase taxation. Taxation may go up as a result of inflation, but they will not increase your tax rate at the present time. So it's already won. And whether the Treasury absorbs the Fed or not, first of all, I very much doubt it, because they want to give the impression that the central bank is independent. The central bank is not independent. The central bank basically gets fed from the politicians, and they feed the investors that pay the politicians. It's all one and the same game.
If the U.S. Treasury did absorb the Federal Reserve, would it be good for gold?
Yeah, I suppose so. But I'm telling you once again, the gold price has done very well compared to equities. People just don't realize it. If you are in a deflationary environment, in an asset deflation, and the gold price stays here and doesn't go down, and on your portfolios you lose 30%, what do you prefer? To lose 30% on your stock portfolios or to own gold that doesn't go down? So it's just the perception of people that gold should be up and up because of this and that. It is up compared to stocks.
Gold mines are closing due to the coronavirus. Are these shutdowns likely to affect the price of gold?
The price of gold doesn't depend much on the yearly mining supply. It depends on investors who buy and sell gold, because there's plenty of gold in the world compared to the mining supply annually. So I don't think the closure of mines would have a big impact on the gold price, but it has a huge impact on a mine. You understand? So the mining stocks, as an example, they have been slaughtered, killed. A lot of mining stocks are down 60% from the high maybe 2 months ago.
How do gold and gold stocks respond during recessions?
Depends which recession. In 73, 74, gold and gold shares went up. In the 82 recession, gold went down. In the 1929, 1932 recession, gold went up a little bit and gold shares did well. But, in the recession 1929 to 1932, the problem occurred in 33 when the government took the gold away. So it depends on the recession. In the last recession, 2007, 2008, we had gold going up. It went up until 2011, and then it went down. So there is no universal answer. But I want to say once again, people should be happy to own gold because it hasn't gone down 30%. That's all I want to say.
Coming out of the 2008 crash, gold and resource stocks did well going into 2011. Could we see a repeat of this time?
The gold price compared to the stock market is up 30% up to now, this year. Because the stock market is down 30% and gold is up 5%. If the stock market rebounds strongly, I don't think that gold will do very well. Possibly it will because of money printing, but if the stock market collapses by 90%, as during the Great Depression, I think gold will also come under pressure, but not by 90%.
We'll have more with Dr. Marc Faber right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Marc Faber. Marc, what's your order of preference for the following? Gold bullion, gold coins, gold ETFs, gold stocks, and junior gold stocks?
My preference is the bullion and some gold coins, because obviously in an emergency you can maybe go into a shop and pay with a gold coin. If you bring your kilo bar, it's a bit more difficult. But these are the two safest investments in gold: the physical and the coins. The gold shares have a much higher return potential if you buy them when they're low. I would say now they're relatively low, and if the gold price continues to go up, I think the gold shares could appreciate, say, easily 50-100%. But the risk is that if they have to shut down production, and if production stays down for a while, I doubt that any government will bail them out, you understand? The government will bail out the airline industry, and they will bail out the cruise industry and everything like that. But gold mines will not be a priority, in my view.
When the gold market peaks, which gold instruments are easiest to sell and which ones are hardest?
When the market is going up, it's easy to sell everything. There's plenty of liquidity. And when there is a sell-off, there's not that much liquidity. And that applies to shares and to the physical. But I'd say the gold market, the physical gold market, so-called London gold, is relatively liquid. I mean, you can sell a few kilos, you wouldn't have an impact on the price. You want to sell 10 tons or 100 tons in 10 minutes, yeah, you have a big impact on the price, you understand? It also depends on the quantity.
Has the coronavirus scare caused a run on gold coins and gold bullion?
I think the corona scare or panic or mania has caused a run on many items. I think people are concerned about food, so they store food at home. They're concerned about tissue papers and toilet papers and so forth. They're probably also concerned about cash, so they probably have some cash at home. And I think they are worried, and rightly so, about the financial system. So they want to own some gold coins and maybe some bullion. But as you know, the price hasn't gone up so much, so it would suggest to me that they are buyers and they are sellers.
Is there a correlation over time between the price of gold and the price of real estate?
Well, in the 70s, gold performed very well, and real estate also performed well, farmland, despite of an increase in interest rates. But it all depends on your starting point. You know, sometimes real estate is expensive and gold is low, and sometimes real estate is low and gold is relatively high. So I think I wouldn't say that there is a perfect correlation, but both real estate and gold are real assets. Now we also have to determine what kind of real estate. You know, is it luxury real estate, or is it a home in the suburbs? Is it an apartment building? Is it commercial real estate? I think commercial real estate is going to be bad for a very long time.
Are we likely to see any currencies backed by gold anytime soon?
Well, I don't think that the central banks would do that at the present time. I think they want to keep on printing money because they're down. I recently wrote a report on the road to perdition. In other words, on the road to disaster. And I think that they are so deep into money printing, they can't give it up. But by now, I suppose that some of them know that it's not going to end well. And if they don't know that it's not going to end well, then they really should not be in a central bank. But they all are. And so I think it will end very badly. And I think what the coronavirus triggered, it's not the cause of the problems. The cause of the problems are excessive leverage in the system that was created by central banks or encouraged by central banks. But the coronavirus is the catalyst to a crisis.
How is gold doing in the U.S. dollar and other currencies?
Well, in U.S. dollars, it's done what I said it did, 5% this year and 50% since 2015. And in other currencies, it is up more.
We've heard for years that gold is manipulated. If the gold market is not manipulated, should the price be where it is?
I think there's a lot of misunderstanding about what manipulation is. I can say that one market is manipulated in the world, and that's the money market. In other words, under normal conditions, you don't have negative interest rates. That is the manipulation of central banks. The price of gold, there are some people like Eric Sprott, they are convinced that the gold market is manipulated. I don't think that this is really the case, but you have to see that the commercials, when the price is at $1,500 and the production cost is $800 or $900, then they sell futures, they hedge. So that can be viewed as some kind of manipulation. And it is possible that at times banks have big short positions in gold, but probably because of the commercials that hedge through major banks, and by hedging, they get the loans from the commercial banks. So it's a complicated process, but I don't think that the price is influenced all that much by the manipulation in the long run. Maybe at month's end there is manipulation, or at the month's beginning there is some manipulation when they're rebalancing their hedges. But in the long run, I think the price of gold hasn't been manipulated.
Overall, are you seeing gloom, boom, or doom ahead for gold?
As I explained to you, I'm a large holder of gold, and I think it will be a good diversification. I think it will move up over time, maybe not as much as some people think, and maybe it will move up more than I think. Who knows? But I feel happy to have the gold as a reserve, and I'm not so interested in the price. If it goes down, it doesn't hurt me because I'm not a seller of gold. I'm holding it as a reserve and as an insurance policy. I think that the insurance policy so far has been validated. Stocks have collapsed, and my gold has still the same value, and is up since 2015 by 50%. So it was a good investment, and it was a safe investment. And more than that, I don't need.
Can you tell us about the Gloom, Boom, and Doom report and how people can find out more about it?
I have a website, gloomboomdoom.com, and I have two reports. I have a report that goes out in printed form. It's the Gloom, Boom, and Doom report. And then I also have the website report, which you can subscribe on gloomboomdoom.com, and it goes out by email, both reports, once a month.
Marc, thanks for being the first guest on goldradio.fm.
Thank you very much. And I wish all your listeners success with their investments.
My guest has been Marc Faber, publisher of gloomboomdoom.com. He was speaking to us from Chiang Mai, Thailand. If you have any questions for Marc or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Comments made on goldradio.fm are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at housestreet.com, talkdigitalnetwork.com. goldradio.fm is a production of House Street Media Incorporated. Executive producer is Tom Allen.